Using support and resistance to find targets is a great way to learn how to avoid break-even trades, avoid getting stopped out, and having these support and resistance targets as take profits. There are great levels to be aware of because price has tapped into them multiple times and reacted each time. Therefore, you can confidently say if price comes in again, there's a likely chances that it's going to maybe come back and hit your break-even. So it's always important to be aware of these levels. And I'm going to show you how we identify them on the 30-minute time frame. So using the 30-minute to find targets with support and resistance, I use the 30-minute time frame simply because that's what I use on a day-to-day basis. I could go over the 4-hour, but then I would feel like I'm wronging you because I do not trade on the 4-hour time frame. So for now, we are going to stick with the 30-minute and how to find targets when you're in a trade. So what actually is support and resistance? It's key that we know the basic understanding of it before we can even use it to start looking for targets. So basically, it's a price level in the market where it keeps getting hit, respected. Price maybe keeps reacting to the downside from this level, or we break above this level and keep tapping back in and using it as a floor, aka a support. So if I quickly just give you an example here, if I draw out this level right here, we can see this is a support zone. We've broken through and we've started using it as a support. As soon as we broke under it, we got to tap back in and we started using it as resistance. And then this can be carried across all the way and price keeps tapping in, tapping in, tapping in. And historically, keeps tapping in, keeps reacting. If you do get a break above, and a lot of traders use this to form strategies, if you do get a break above, you can normally expect to tap back in to then take price to the upside. Just like if price wants to go to the downside, you can expect a tap back in to take price further down. So support and resistance is a very easy concept to understand, and as soon as you load up a chart, whether you're on the 30-minute, the 5-minute, the 1-minute, you're going to be able to find levels where price keeps tapping in multiple times and keeps reacting off, using it as support and resistance levels. So if you're not too sure on what they are, please go have a look at your chart and find something like this where price just keeps tapping into, yet keeps respecting on these certain price points. So without further ado, we're going to get into a couple examples of how we can use them as targets and what do we do, how do we manage a trade once we've found this target of a support and resistance level. I will just clarify before we go any further that the red candles on my chart, I know it probably looks a bit funky and you're probably thinking, what the heck am I looking at? The red indicate Asia session and London session. Because I'm trading US session, I have no interest in what London and Asia session have to give me. So therefore, I just make them red. The more beige is US session. This is so when I'm looking on the 30-minute, I can immediately see the zones that I want to mark. We mark the highs and lows of previous US sessions and we can get trades off them. And it's pretty much as simple as that. So let's say you've loaded up the chart for the day. And this is what it's giving you and this is what you're looking at. Using the previous US session highs and lows, we would grab zones. So grabbing some zones for the day, we'd understand the structure of the 30-minute time frame. We could say, well, okay, what can we see? If price breaks above the previous US session high, I want to see a break above, a tap back in, and then ideally I want to see price give us that 5-minute engulfing to take price further to the upside. Again, if price pushes all the way up here, which is unlikely, but we'll be aware of it anyway, I want to see the exact same thing. A breakthrough, a tap back in, and a push back up. On the flip side, if we can contain and hold this downside pressure that we've been having, I want to see a retest in to the previous US session low to take price further to the downside. So I would watch price, and as soon as I realize price has opened, price has given me an entry, I would then go find a target. So if we jump to the 5-minute time frame, and we're just going to play price on a little bit here. So we're waiting for US session. Again, no, whatever happens in Asia session or London session, I do not care. It could give us a perfect reaction from the zone, which it has right here, but you would never get in London session if you're trading US session. So although it gave us a perfect entry, ignore it. We are waiting for a US session open to tap into the zone and give us our engulfing candle, which if you look at the chart right here, you can see it has done perfectly. So if we use our short position tool, because we have got that tap in, we've had that 5 minute engulfing, and always wait for the 5 minute candle to close. Then comes our 3-rule process. Have it above the bodies, above the wicks, and above the zone. In this case, it ticks all 3. So now what would you target? So on the 5 minute, you can already find some levels of resistance that we might encounter and price may potentially reverse from. It has come to this price point before and immediately shot back up to our point of interest where we were going to get entries from. If you then jump to the 30-minute time frame, you can then scroll back a little bit more, and then you can identify more points. So you're simply looking for points in the market where price has tapped in continuously and then draw the line across. In this case, we have a big gap here, so we'll have to look at these candlesticks right here. A lot of the cases, you're going to get candles, for example, like right here that you could be aware of, right here. But for the time being, because price is near this point, because we want targets near this area, then we're going to have to find targets from further back in history. So, where has price tapped in multiple times? Well, we can immediately say, well, it's quite clearly had some level of resistance here. We've used it as a resistance, we've broke through, and we've used it as a support as well. So we can drag that all the way across, and we can expect we're going to have a little bit of a reaction if we do come down to this price here. Now let's say we want a bigger target. Me personally, I'd be happy with a 1 to 2 because I risk 2%. That would be 4% in profit, or a 2% loss, or a 1% loss if you want to minimize your risk. And then you could say, okay, well, where else are we finding resistance? Now, a big one on your screen, if you haven't realized it already, is this level right here. We've tapped in multiple times. We tried to break above, didn't hold it, broke, tap, 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 broke above, and then used it as a support as well. So these zones are everywhere. As soon as you open up your chart, you are going to be able to see them, no matter what you're trading, no matter what you're looking at. Even if it's crypto, you're going to have support and resistance levels because the market is driven by the humans, by the price. So therefore, it's always going to form a similar sort of pattern. So we'll have a go big or go home target. Like I say, for me, the 2% would be enough. But if we jump to the 5 minute time frame now, we can see we've got our entry criteria. But if price comes to this level right here, where these wicks are right here, we can have, okay, if price hits here, I want to either move to break even, or I want to take some profits out the market just in case price does want to do what it's done in the past, as we can see here, and completely just reverse back to break even. If it does go to break even again, you're increasing your chances of getting stopped out. So therefore, just have a break even strategy and a take profit out the market strategy. Just make sure you're aware of these levels because price can reverse from these points. It might not always happen. They might not even respect these zones. But a lot of the time they will get respected and you might see price start reversing. That's when you start panicking, and that's when the whole psychology comes into the trading. For now, we're going to stick simply with the strategy. So we've got our entry. Let's see what price wants to do. So we've come to this area. Price has had a little reaction and it's actually carried all the way to the downside. However, you can see we had a little reaction. So maybe if you saw this candle wicking up right here on the 5 minute time frame. And remember, when you're watching the charts, a 5 minute is a long time to be watching a candle. Trust me, I've sat through the chart many and many a time just watching 5 minute candle close, open, close, open. Like, it is a lengthy process. So you're watching this start to climb all the way up. What would you do? Simply just move your price to break even. Or just take profits. Just say, okay, well, look, price seems to be coming back a little bit from this zone. This candle directly stopped on the zone. We started getting a price back up. I want to at least be break even, or I want to take at least maybe 1% of my position out of the market and I'll let the other run. Then we carried all the way down, and if we just continue to play price on, we can see price came to exactly this level and then started reacting back off our previous level that we marked out, using it as a resistance zone. So it's very important that you're aware of these zones because they can completely reverse price. So always be aware of it, always have a target. Now, there's probably going to be a multi-part to this sort of this strategy. So I will just cut it off here. So just always be aware, guys, of these levels. Otherwise, it's very, very easy to get caught out. And have a plan. If you don't already have a plan of taking money out of the market or moving break even at 1%, at 2% maybe, have one, because it's going to save you a lot of money in the future. And yes, you might see price come back, stop you out, and then go all the way down. But if you haven't had that experience already, then you haven't been trading long enough. So you're going to have these regardless, no matter if you've been trading a year to 10 years. You're always going to have these moments where price just runs away from you, stops you out, and then runs away. So this will wrap it up for this one. I will do more examples in the future, but for this video, that is going to conclude it. So like I say, general rule of thumb, just be aware of these levels.